Good afternoon, everyone, and welcome to Stock Market Today for Friday, May 23rd. It's Alissa Coram here. And last week, we got a power trend. This week, we got a pullback. So, joining me to discuss this week's market action and to put everything into perspective for us is my colleague, Mike Webster. Hey, Mike, how's it going?
Howdy. I'm doing pretty well. It was an
All things
interesting week,
considered.
wasn't it?
It sure was. We have a lot to discuss. So we'll get right to it. We'll give high level thoughts on the major indexes, go over the sector action, talk about a couple of stocks for the radar, and we will wrap things up with a look at Webby's charts to give you that added perspective of how you should be positioned in the current market. And then we'll end with our battle plan for the week ahead. And maybe if we get lucky, we'll have a song of the week. How does all that sound?
I'm still working on the song. That's the most stressful thing of my week is like when I forget, like today, to think of a
So
song.
much
So
pressure. So much
we'll
pressure.
see.
Nah, it's
Yeah.
low
Maybe you'll
stakes.
give me some clues during this.
Yeah,
Yeah.
maybe we'll give you some inspo there. All right, let's get right to it with a look at the major indexes. A down day in the market, the Nasdaq finishing 1% lower on the day, the S&P 500 down 0.7%, right at a key level. We'll unpack what's going on there. Meanwhile, the Dow down 0.6%, and the Russell 2000 down 0.3% or so, headed into the session's close. So well off lows there. So Webby, this morning it was pretty ugly open, I guess you could say. Our lowest trading levels for the major indexes in about a week and a half or so. So what do you make of not only how the day went, but where we closed? Because that's the most important part.
Well, this was really important that we got this test this week. And let's go over to SPY because I
Yeah.
think that one, they're both very important. And today, this one is the most important because it passed the test for today of the 200-day, that black line. And now we always talk about the 21-day. We also talk about the 50-day. But as we mention all the time, everyone on the outside cares about the 200-day. Everyone, whether you're a value person, a momentum person, a growth, anything in between, you're aware of it. All the algos, importantly, will tend to buy above it, sell below it. So the fact that we came down to that today, that was not by chance that it got support there. The bulls stepped up, and even though we were down on the day, and didn't close at the highs, this was a successful pullback and a successful test. Right now, next week could be different, but like you said, we started the power trend last week, and we were sticking straight up there, and we could have kept going up, but it's fine. The news hits the market, and then and things come down, and that happens in bull markets, and it happens in bear markets. You just deal with it, and your job is to look at it and say, did things get better, worse, or the same? And I would actually say better,
Yeah.
because we were sticking straight up there. We could have just kept on inching up like we did in the 98, 99 timeframe that we always go back to. But this is more normal, where it's not a straight line. It'll go up. It's kind of like a sine wave at an angle. Like if you remember back from high school trig or whatever it was, the sine wave that would go back and forth like this, but on a way up. And that's what you had, this nice little pullback. Well, it didn't, it never feels good, as you're giving back gains. But this, we had day after day after day that was down. But the supporting action that we got here, and we didn't even touch the 21-day, which is a really big deal for me, as well as staying above those marked lows on a closing basis at 57.86,
Mhm.
95. If you look at this whole structure as a double bottom, like, in the spirit of a double bottom, that it held there. We will see what happens. It's a long weekend, which is tricky because it's a long weekend here in the US, and not around the world. So everything is going to be, still trading on Monday in most countries. And then what happens is we play catch up because it is a global market. everything is interconnected. And so if
Mhm.
the foreign markets have a good Monday, let's hope, then we'll get a lift on Tuesday, generally speaking. But if they sell off on Monday, then it puts us in a vulnerable position
Mhm.
on Tuesday, because we tend to kind of trade in line with what they would have done, and then that's going to put us underneath the 200 day. So you got to be very careful there. It's a big deal. Like the 200 day is a really big deal. We've seen before where you poke up above it, and we saw that in the COVID, and then you come back below it, and then you can still move, you know, you
Mhm.
can just have a shakeout below it, but you don't want that. That makes things a lot harder, and you got to, sell a bunch, then buy a bunch back. But at this point, very successful um, test, and we're no longer in that like nosebleed type of feeling where we're up there and is really hard to buy. This
Mhm.
week, especially today, we had a lot of upside reversals. We were getting them yesterday. We got other ones today, and that's a very good sign. For swing traders, it gives you something to trade against. When you have an upside reversal, you can buy that day and then use the low of that day as your stop. So if we gap down on Monday, the swing traders out there like myself, well, I position trade as well, but I lean heavily swing trading. That I'll have to be selling a bunch, on Tuesday if they undercut them. But it is what it is. That's kind of my favorite entry point is an
Yeah.
upside reversal.
Exactly. I totally agree, Webby. I think that this is so far a welcome pullback, even though, as you mentioned, it's not fun. But if you just step back and put things in perspective, getting these pullbacks within the context of a strong uptrend does make it easier to manage risk with new entry points. So I think that that's a healthy development here. You also have to put into context the news this week, and especially today, where more trade fears or trade concerns, right? Whether it's Apple or with the EU, those trade tensions are flaring right now. So the fact that we didn't break below that 200 day or close at session lows, and we saw so many upside reversals in compelling stocks, I think that that is very, very encouraging given the backdrop of the macro that we've seen, and especially anything tariff related was one of the primary reasons for a lot of the selling in February, March, April. So as of now, it seems like the indexes and leading stocks taking this news in stride for the most part. But like you said, we'll have to see what next week brings.
Well, I really like that you brought up the news and the reaction, because that is so important. It's not the news, it's the reaction to the news. And so today's move, like when I was looking at stuff pre-market, and then when the news came out of the tariff stuff from President Trump, I was like, wow, man, this is going to be really bad. We could be down 2-3% easy. And we weren't. And you could see on S&P, we weren't even down 1% on a closing basis. So that reminds me of times like, I hate to bring it up, but like after 9/11, after terrorist attacks back then, what would happen is anytime there would be any potential terrorist related news, right after that, the market would sell off really hard. And then eventually, as time went on and the market was able to price things in, it wasn't that it wouldn't be really bad, both from human standpoint, but also from an economic standpoint. The moves just started getting smaller and smaller until it was a non-event. So I don't see it being a non-event, any tariff related. I really think that President Trump is just negotiating. This is his tactic. I don't know if I'm right or not, but that's how I look at it, and I think that's how the market is looking at it. And some people like it, some people don't. That's not what we're here to talk about. It's just we're talking about the reaction to it. In this reaction versus the reaction we had when the tariffs were first announced, the details of it,
Yeah.
it's night and day. I mean, we fell apart before, and this time it's just we fell, but it wasn't that bad. Given these are pretty big deals of the tariffs have a big uh, they impact a lot of different people. Like, let's just say just the iPhone aspect of it. That's not just Apple, it's all the people that that provide to the Apple, ecosystem, or the Apple iPhone itself, like building all the chips, as well
Mhm.
as the retailers or anyone who's selling them. I mean, it impacts a lot of people, and that's just one tariff. So you add up all those, it's a big deal, and the fact that the market just kind of brushed it off, and even Apple only being down 3% on news like that tells
Mhm.
you the market is starting to price this in, and that's a healthy market, frankly.
Yeah. And the Nasdaq, even though it closed down 1% on the day, it too, like the S&P, was able to close off of its opening lows, Webby. So tell me briefly some of the levels that you're seeing here for the Nasdaq or the action. We're holding a bit more above that 200-day and the 21-day here versus the S&P.
Yeah. So on Monday, it's been such a long week. I don't even remember what the news was that we gapped down on Monday. Do you remember off the top of your head? I don't know. It was something bad, but
Yeah, and we shook it off. Yeah,
yeah,
yeah. We were having goldfish memories ourselves.
I totally am. It's just so. Anyways, we gapped
Try to
down
see
and
if
then
I
we
can
came
find it.
all the way back up to the basically where we had closed the day before, the trading day before. And when that happened, I was like, okay, this is very good for the market, but I was lightening up because it
I remembered
felt
it. It was that Friday Moody's downgrade.
the Moody's downgrade. Yeah, they did it right as we were going on air. It's
Yeah.
like, thanks a lot,
Not
Moody's.
before. Not before we went on air. It was after we were already rolling.
Yeah,
So,
that's right. I forgot. Like I got off air and I saw that and I'm like, are you kidding me? Come on.
yeah, but look how we shook that off.
Yeah, it was, that
We
was
couldn't even remember what it was.
it was a Taylor Swift moment. It's going to be my only Taylor Swift reference ever in my entire life. But
And I
anyways,
missed it because I was laughing at my own
well,
self.
we shook it off.
Oh,
Isn't
shake
that
it
her
off.
song?
Yeah.
Yeah.
Okay. Yeah.
So
Keep
with
going.
that, when you came back, that, in my opinion, that was the Bulls' ammo. The Moody's downgrade was a big deal. It really was, and we could have been down 3-4% on that if the market was in a weak position. But that was telling us a lot. They went in and went in there and bought and pushed it up, so it was a non-event of a day. But I think they really didn't have any more ammo, and so I was lightening up with the assumption that we would come down and test that low, undercut it, and get to that low of the day that you marked there, that low. I thought that was going to be, in play, and we were going to come down in there. I didn't see us coming all the way down this far, so it got worse than I was expecting. But still, given the context of the
Yeah.
Moody's downgrade, the tariff stuff, and
Mhm.
still
And then the bond
uncertainty.
news midweek.
Oh yeah, yeah. God, no wonder why I can't remember anything. It's been a crazy week. So you you sell off, and next week I won't remember anything. But this was really good action. It's hard to say. Like, let's toggle over to the weekly to
Yeah.
see what we were down on for the week. 2.47 and stayed above last week's low. And we had that gap up. So we have a lot that we could have gone down and still been in this general uptrend.
Mhm.
But yeah, so I think it's really good. And it's strange to say it was a really good week when you're down 2.5%, but it really was,
Yeah.
given what it could have been.
Exactly. It's all about that context. We're all about the context here. How about a quick look at RSP before we move on?
Yeah, let's do that. That one was bothering me because that was selling off stronger, or harder. And it broke through that 200-day. Now, the 200-day on this is not a big deal because no one looks at the RSP. Like I look at the RSP and some folks around the building, but no one looks at the RSP. But it's my way of looking at the average stock since it's the S&P 500 equally weighted. So it's the same universe, just done wherever, where there's equality, rather than the Apples and the Amazons and the Microsofts weighing so much on it. And your average stock came down so much. I was starting to get concerned, but yesterday midday it looked like a nice upside reversal. I gave that a shot, then had to back away from that today because it just was down too much. But that looks like support at the 21 day
Yeah.
and upside reversal there. So today's low, you would want that to hold. And again, if you kind of step back from it, this look, we moved up from 150 to 180, your average stock, and this is not giving up much ground,
Yeah,
at least at this point. So
right.
yeah, I think that was good. And what is it on a weekly? How much was the average stock down?
Let's take a look. 3.1% versus the S&P's decline of 2.6%.
Okay. So it kind of tells you, you always want to look at that to know, are they favoring the big caps or not? And
Yeah.
clearly with that, they were favoring the big caps this week.
Yes. Okay, let's check out the sectors briefly. We'll make it quick. A few ETFs that we'll throw in there as we go, but tech was the weakest sector. It looks like as of today, as of Friday, but no surprise with that Apple related news, XLK down 1%. But this is a cup with handle here, Webby. Tech has been leading off of the lows. Now we're pulling back, perhaps a little bit more, but still holding at healthy levels. I think, again, headed into this week, it just felt like, wow, so many stocks are getting stretched, feeling like maybe we're opening ourselves up to chasing the strength, and saying, hey, maybe be a little patient for a pullback depending on the names that you're looking at. And it looks like that's what we're getting right now. This does not look like terrible damage here to me at all. It looks like normal action,
Well, what do you like to have in a handle?
a shakeout,
And what was this
a shakeout.
so far? So yeah, I totally agree with you. It's always a shakeout until it falls apart. But that
Right?
looks like it, being objective about this,
Yeah.
it looks like it could
Good.
have another bad day on there and still look normal because
Yeah.
hover over this base, and I'll
Hmm.
shut up for the rest of these.
Yep.
Only a 3% deep handle on a 29% deep base. You know, i- with 29% deep, I mean, you're entitled to a 10% deep handle on that and still being normal, or even, an 8%. So, we could be down a lot more and this chart would still look
Mm.
okay. So if we have a bad week next week, it's not going to necessarily break this look.
That's actually a really good point, I think, for our audience because we're all about scenario analysis here. So, if we do get more weakness, what does that weakness look like? Are we going to see buying opportunities on the other side of that? But in the meantime, what is the game plan? How are you lightening up exposure? So all things to think about, not just, oh, hey, the S&P passed its test. We held the 200 day. The coast is clear, right?
Yeah.
Um,
You want to
it's
know where a chart is broken. And
yeah,
sometimes there's a clear level, and sometimes it's like a gray area. But
yeah.
with this one, I would say if it came down to that marked high, the 21864, that's about as low as visually you would want it to. It could trade underneath there, but you really wouldn't want it living or closing beneath there. If it did, then
Mhm.
it would feel like it would need to form another base, like maybe
Yeah.
a little flat base or something.
Yeah. Love that. Okay, XLY, this is consumer discretionary. You've got your Tesla and your Amazon in here. Also pulling back this week. Perhaps we'll get some new setups to develop here. Communication services, your Meta is in here as well as Google. Looks like this held up visually at least a little bit better. In my view, it looks like the RS line ticked up a little bit this week. So I think we're right now. It's for a lot of traders. It's a combination of things. Um, Managing your existing positions that you established early on after that follow through day on April 22nd. Do you want to lock in profits? Do you want to trim back, or how are you managing the position size in this pullback? For more recent positions, also seeing how you need to manage those as well. Are you exiting? Are they holding levels that you're expecting them to hold? And then the third category, it seems like waiting and watching for new setups or places to add to those existing positions. So I feel like with a lot of these charts that we're looking at, it's going to be the, hey, let's see if there are new setups, and like you mentioned today, a lot of reversals underneath the
A
surface. So
lot, a ton.
actionable opportunities abound. Okay, speaking of XLF, a little mini reversal on Friday as it's been pulling back with the broad market this week. We will take a look at a financial sector name. Here's a look at industrials, also a mild pullback this week, but that relative strength line remains quite healthy. Materials, the relative strength line ticking up here this week a little bit, some sideways digestion. I would want to look into this group and see what are the leaders and how did they look. We also have healthcare continuing to lag here. So, aside from a couple of individual names, by and large, this is still a sector that is suffering. Your real estate pulling back this week as well and undercutting the lows from the prior week. So looking weak to me here, as well as energy also falling back towards levels it was trading a couple of weeks ago. That relative strength line remains in a decline for the most part. Consumer staples reversing higher on the day and showing relative strength this week. But Webby, what's your assessment of what we're seeing in staples?
That RS line is moving up so quickly over the last, week and a half. That's when you go in and you look and you see the different, um, you can go on their website, look at their holdings, and I do that, and I'll play through them. I just copy and paste the symbols into Market Surge, and then that way I'll get a sense of like what is driving that, and is there anything in position? Because even though it's an ugly chart, you look at that RS line going up there, and
Yeah.
there might be some things that you would want to that you could buy in there. But like we talk about all the time, you don't want the staples doing well, because that's a place where folks like to hide. So that's why you would want some color on there to see, is it the real safety plays that are moving up or something else? Hopefully it's something else.
Okay. Yeah, and
You're
then
such a
utilities.
multitasker. You can't do less than 4 things at once. I pay attention.
And then utilities here, a strong day. There was news in the utility sector, especially the nuclear plays had a great day. This was news out of the White House as well, an executive order from the Trump administration to support the nuclear energy sector. So saw a lot of action there today, Webby.
Yeah, we're going to talk about that. Yeah, we're trading that space in on Swing Trader, and we'll discuss it in a little bit.
Okay. All right. So let's go to our individual stocks now. So this is a great segue to CCJ, Webby, one of the stocks in the mining metal ores group, focused on uranium, a big breakout today.
Yeah, so with this, it's tricky when you've got a stock like this that's moving up on news. You can either buy it and then use the low of the day as your stop, and there's nothing wrong with that. I do that all the time. But for swing trader, we decided to look at this space and trade it in ETF. I own it as well, the NLR that kind of captures the whole nuke space, and it's still that was up a lot too, and we didn't get it at the open, we got later in the day. But I was just looking for something, an individual stock that was in position to put on, and they're all just so out of there. Like, let's take a look at Oklo, which our good friend Scott St. Clair has just been killing it, trading it, and that one was up 23% on the news, and it already run up into this. So it just didn't seem like a good time risk reward to be buying an individual stock up on this news. So what I like to do is go into it first with the ETFs, and then as they let's go back to the CCJ, that as that sets up and gives a better entry point, then that's where then I would reduce or eliminate the ETF and then go into the individual stock. It's just how I like to manage risk. Another way to do it is just doing a smaller position, here. If you normally do a 10%, maybe do 2.5% or 1%, because it's normal after a big gap up to have some back and fill. Sometimes they just gap up and then just keep on moving up, and that's always nice. But many times they'll just go sideways for a little while and then give you an entry. Either I
Mm-hmm.
prefer a shakeout upside reversal to get in, but you can't tell it what to do. Now let's take a look at the weekly on this one. So this big giant base, and it has a pattern of building these big bases. In fact, let's go out to the monthly just to get that perspective as well. So what's nice about this is, even though there was a dog for a decade or so, since 2020 you've been in this general uptrend, but you also look at the monthlies to get a context of what are you dealing with. And a good way to look at it is the RS line. Is it able to maintain above its moving averages on an uptrend or not? And this one is really jagged, right? It comes down and it hits your gold line, your shorter term one, but it does tend to stay above your longer term blue line there. So that's good, but it also tells you you're playing with something that's hard to trade, frankly. So it also goes to your position size, and that's why you always want to look at it a daily, weekly, monthly, and an intraday. Now let's go back to the daily, if you don't mind. So with this, because it's up and out of there and it's 10%, out from its pivot, this is where you're just under the normal guidelines. You really can't, buy something that far extended. So again, if it gives us an entry point, hopefully something over the next 2 weeks, then we'll rotate into this name. And when you get that big of a move, and I normally don't look at volume at all, but when you get that large of volume on a big stock, when it's not an earnings day, like I pay no attention whatsoever to the volume on an earnings day, because there's all the market mechanics with options and everything that we're playing into it today too. But when you get a move this big in a liquid name, that tends to be the beginning of something, because the big institutions are trying to say, let's say they've got 0% in this and they want a 0.5% or a 1%, and they've got 100 billion or 200 billion to work with. That's a lot of buying, and that takes a while to get in. Now, if they want to build a 3 or 4% position, which would be huge for most funds, that'll take a while to get in there. And that's the one time where you look at a volume spike where it's that big on a non-earnings related day.
Yep. All right, Webby, well said. One to watch. Next on our list is one that we're circling back on. We actually covered RCL last Friday, but I think this is a great lesson of watch list building, right? We said, hey, look at all of this strength coming into this group. Let's keep an eye out for how this right side of the base develops. And what do you know? An upside reversal on Friday, right at the 21-day line.
Yeah,
For
and
RCL.
that's my favorite entry. And so we did put this on. Did we put it? Yeah, we put it on Swing Trader as well as I bought it. We have to wait 30 minutes. I bought it myself because this gives you a perfect entry or a perfect exit. Today's low, and if it goes through today's low, I'll just back away from it. And your best trades are really the ones that you have an ideal exit that's clear and well defined, and that's what you've got here. Plus, I like, we've talked about it on IBD Live and on the SMTs. I have a positive bias towards this group, just because I like going on cruises, and so and I like Royal. But pull up Viking for a second, because that was interesting, because it had gapped down on the earnings, but it hasn't fallen apart. So even though the market clearly doesn't like the earnings, they're not just letting this go and just fall apart. Typically, when you get a gap down like that on earnings, if you don't bounce back right away, you tend to fall, just keep falling and falling. And normally, I would have expected this to be at like 38 or lower right now, but it's at 43 and change. So that was a sign that they're not just throwing out this whole group. And the CCL looked as interesting as well, but I think RCL is the best looking one in the
Mhm.
group with a clear exit. And let's go to the
Absolutely.
weekly, if you don't mind, for a sec.
Yeah.
And
Let's
let's
do it.
just go down to the quarterly numbers.
Mhm.
So what I like about it, I don't like the sales decelerating like that, but you do have that earnings acceleration, general acceleration from 30 up to 53. So it had some big
Mhm.
numbers and really like the post-COVID and all that. You had some weird stuff going on, but now it's when you get a big company like this that can put up a 53% quarter, that's really good. I normally wouldn't like a deep base like this, but you want to put it in the context of what the general market was doing. We just had, I mean, people got to remember, we just had a bear market. It
Yeah.
doesn't feel like it, but we had a 27% deep bear market in a short period of time. I mean, we're just, weeks past the low. It's so stocks were entitled to do some deep bases like this, but the same thing, if the market had been in an uptrend, I wouldn't touch it with a 10-foot pole.
Yeah. Great context there. Last on the list, we mentioned we were going to cover in terms of this section, last on the list, a financial sector name, JP Morgan. This is another one, Webby, that we were watching the breakout, and now another chance for those who perhaps missed that double bottom entry or needed to reduce or exit on the pullback, an upside reversal on Friday, right at a key level.
Yeah, and we did put this on Swing Trader. I think this is more of the stock for most people to trade. It's not going to have the type of moves like the energy related or tech related, but you also tend to not have those blow ups in there. When they fall, they tend to be like they give you enough warning, like they'll let you know to get out, generally speaking. Um, and Goldman looked good, Morgan Stanley looked good, so the whole area looked good, and we were thinking about doing an ETF. But as I was playing through all of them, JP Morgan had a slightly better chart and was holding up better than the other ones, or just looked stronger than the other ones, so we went with this. And again, I love a pullback to the 21-day with an upside reversal, and the way it did it, I love how you mark those lines, that touched your double bottom. So this is classic. If it doesn't work, it doesn't work. But these are the trades that you want to take from a risk reward standpoint. Now, what's not good about it? Let's go to the weekly on there, and let's go down to the quarterly numbers. And
Yep, quarterly numbers.
yeah, and so the sales are kind of all revenue is all over the place, and the earnings are all over the place. So that's a bit that's a problem. But let's go out to the monthly to just look at the character of this stock. And again, this is how you get a lot of information of what is the character. This is not generally a leading stock. It is can move up, but the way I think of a leading stock is when your RS line not only moves up but keeps a distance from its moving averages. So that tells you you're more likely to do this as a swing trade than a position trade. So even though it has a risk profile for a position trade, the fact that historically it just doesn't tend to really dramatically outperform the market, you just want to trade it rather than just buy it and hold it for a long period of time.
Mhm. Okay. Webby, are you ready to go to your charts? Actually, before you do,
Sure.
there's one more thing that I want to talk about. This kind of ties to the battle plan for the week ahead, but I think it's a good spot to talk about it right here, right now. And that's Nvidia earnings. This hasn't been a stock that we've called a leader for a good while here, Webby, but it does have a big index weighting. It's very important to the chip sector, to the AI theme, and we are getting earnings next week. So I think that's something for investors to be aware of.
Yeah, that's a good point. And so I was just checking. It looks like that's Wednesday, the 28th after the close. So that is going to have a big impact on all the all the chips, right? And it's because the market mechanics. If this was 20, 30 years ago, it wouldn't have as big of an impact. But now you've got SMHs, SOXL, SOXX, USD, like all these ETFs that are centered around that. So if this sells off, those ETFs go down, right? And then you get a lot of selling in those that then goes off to the other stocks in the group, whether it's Taiwan Semi or Broadcom is my favorite one. Do I have a position? I don't think I have a position in it right now. Let's go over to
Broadcom.
AB. Yeah, to Broadcom
Yeah,
for a
really
second.
nice and tight
Yeah,
action.
that one
Mhm.
I tried this week and then just backed out of it because it just you can't have everything, and then the risk of the Nvidia earnings were around the
Mhm.
corner. I'm like, okay, maybe it doesn't run. People hold it back until they see how Nvidia does, just because of that sector thing. So with the Broadcom, let's put it this way: if Nvidia has a good report or the market likes the report, forget what the numbers are. If the reaction is positive, I'd be more likely to go to Broadcom and buy that or buy the SMH than buying Nvidia. Let's go back to the Nvidia for a second. Now, if Jensen says something really, that people aren't expecting, and you get this big move above like 155, 153, then that's different. And then
Yeah.
that's kind of a game changer. We love that because that would help everything. It would help SPY, it would help NASDAQ and SMH, and everything would lift with that. But I'm just not counting on it because
Yeah.
this structure is underneath the last structure, and it's wide and loose. So you had that nice little base up at the top that it broke down from, and then you have this horrible looking structure. Yes, everyone loves Nvidia and loves what they're doing. And I think I saw something late in the day that I think I had this right, that Oracle was buying, like, check the news, but it was like 40 billion. It was a large amount of chips from Nvidia. And you always keep getting that positive news flow there. But stocks can't go up forever, and they need to base build. And sometimes they base build a lot longer than you think. But this is a leading stock, or it has the potential to be a leading stock for a long period of time, because again, that distance, that green line, your RS line versus those moving averages, night and day. Pull the JP Morgan back up again for a sec
Mhm.
as a contrast. You notice there that it just, when it starts to outperform for a little bit, it comes back in, and it can't do it for a sustained period of time. Most recently, you've got some white space in between the lines, so it's looking like it's trying to change its character in a positive way. Now let's go back and look at Nvidia, which is just a beautiful thing when you look at it from this standpoint. That RS line, for months and quarters, in even years, it can stay above its moving averages. And that's a big deal. And it's still, even during this base building period, it's still above those, and it never even came down to your blue line. So if you've got a long, if you like to hold things for a long period of time, this is the type of name that you want to try to get into, and then give it that space if that's your personality. But looks good on the monthly, but on a daily and a weekly. Let's go back to the daily on this one. Um, there's just better stocks out there.
Yeah.
It's not terrible, it's just a base underneath something. And what would be nice is if Nvidia could just sit out for 3, 6, 9 months, and just not go underneath 80 and not go above 150, just base build. And then that allows it to eventually get tighter and then launch higher again. But we'll see.
Yeah. We shall see. And I think the other interesting thing about Nvidia is not only do you have a lot of investors looking to the company for its outlook on our whole artificial intelligence theme, really as a bellwether there, but also you have this trade war element, right? So
Mhm.
I think it'll be interesting to see what they say on the call, and more importantly, as you said, Webby, how the stock reacts. So yeah, wanted to get your take on that ahead of earnings next week. So thank you so much. Are you
Sure.
ready to pivot to your charts?
Yeah, let's give it a shot. Let's see if Webby can do this. Let's see. Did I do it?
Yep.
I think I did it. Okay. So here is our Bob Weir take a step back, looking at the bigger picture, the weekly of SPY candle on here. And last week we had that beautiful gap up blue candle, meaning that it closed higher than it opened, and we kind of had the reverse in a little bit, where we have a pink candle that it's about the same size as the body of last week. But last week you had a big gap in there. This one, we didn't have a gap. So it's doing nothing wrong. Would we have liked to just build and move above 600? Of course, but you can't always get everything you want. And so this is just doing what it needs to do. And from this perspective, it could go sideways and drift down for a few more weeks. We don't want that, because then that would put it underneath the 200-day on the daily. But looking at this and just forgetting all that other stuff, and that's why we look at this, that what would be normal and natural, it would be okay for it to come down for a few weeks. That's just the reality. And I hate saying it because I'm long the market, but you've got to be objective with it. Now,
Yes.
the NASDAQ looks better because we were able to hold up, and look at that. The body is much smaller. So that's the difference between where it opened and where it closed on the week. And you did travel above last week's high just a little bit, but our low was able to stay, above last week's open, and we closed above last week's open. So it just looks stronger. Look at that versus SPY. Do you see where that we closed underneath last week's open? So it's just a different type of look, and the composite is certainly stronger. So are you
Mhm.
still with me? You're frozen a little bit on my end.
Did I? Did I
Okay.
freeze? I think
Okay.
I was just
Okay.
paying super close attention to what you
Okay,
were
maybe
saying.
you were gonna fall asleep.
No,
Um,
never.
so here we've got SPY, and this is our regression line. And remember, we drew this regression line here starting in mid-February, and we went down to mid-April. And when it broke above that, we said we were going to lock that in and then wait for things to change. We're getting, um, to a point in maybe 2 weeks from now where we'll do one starting with this follow through down over here and do a new channel, but visually you can kind of just see the angle that it's going at, and you want it to just keep going in that way, and certainly not come back into that area. Same thing on the NASDAQ. And so let's go over the 50% retracements, and we'll start off with SPY. So this one, your high point here is the high in mid-February, and we're using the low here in
Early
what
April.
is that? Yeah, my mouse is giving me trouble, but yeah, April 7th it looks like. So then our midpoint is 547.52, that orange line or that gold line there. We want to live above it, and that's what we've been doing for the last few weeks. So that's certainly a positive, and we want to keep getting closer up to that 613. Let's look at the NASDAQ. And the same thing here, we want to stay above that 17,447 midpoint. But I did put the Qs in and did it in a little different way. And I just took the highs from a couple days ago, from the 21st, and then today's low. And let's just do this on a 60-minute chart to get a different look at it. So we want to get above that midpoint, that 514.29, for to be in a short term in a position of
Mm.
strength. So short term, we're in a position of weakness because we're underneath that level. And so that's something that I would keep an eye on the Qs, 514.29. And that's not a buy point. That's just an area where you want to get above and start living in the northern hemisphere there. Now let's take a look at the levels. Again, I have left these levels alone for several weeks, maybe in even a month or so, and just wanted to see how they play out. And so we went up through a few of them. We were getting up to the new one that we wanted, or the yellow one, the 598.51. And we ran out of gas before we got there, but we came back down and we stopped exactly where we would have wanted to stop, which was the low here from the January 13th, that we're using this line here. So we defended that. That is good, and that's actually a very big deal. And of course, like we talked about, that's right where the 200-day is as well. Same thing basically on the Nasdaq. It ran out of gas before it got to the 19,335 level. But this one we fell below and closed below that nice line in the sand, that 18,831 and change. That one we're underneath it. So we definitely want to get above that next week. So it's really interesting depending on how you slice things. In some ways, the S&P looks stronger. In other ways, Nasdaq looks stronger. Like the S&P came down to the 200-day, whereas the Nasdaq held above it. So
Mhm.
Nasdaq was stronger there. But when you look at it from these levels, it's the reverse. So that's why you look at
Yeah.
both to do the whole mosaic thing. We'll end these charts with just doing the very simple thing and looking at the 21 day, and our low is still above it, which is a beautiful thing and what we want to
Mhm.
keep. And then the same thing there on Nasdaq.
Before you take them off, I have a
Yeah,
question.
yeah,
So, we're in a power trend. That
yep.
21-day line is important for a power trend. How are you thinking about using, thinking back to 2020 or other power trends where you get these pullbacks to the 21-day line and bounces? How hard do you press the gas when that happens?
Hard. It all depends on the what's around to buy at the time and the
Yeah,
context of everything. But as a
sure.
general rule, when you're in a power trend and you get support off the 21 day, that's about as hard as you ever hit the gas, because your backdrop is, and I'll just stop sharing for a second. Your backdrop is that you're in this intermediate trend that's super strong, right? But then short term, you're coming down and you're weak, and you're coming down to your 21 day. And if you find support, especially if you get an upside reversal from there, then you can gas it really hard because you have something to trade against, which would be the low of that, like an upside reversal or support at the 21 day. So that's really where I hit it as hard as I, you know, ever would. And I did kind of hit it hard today, but we had the 3 day weekend and everything in Nvidia next week. So I had to temper it a bit because of that. But if we didn't have both of those things going on, it would have hit the gas, even harder, because we were able to maintain that 21 day.
Great thoughts. Thank you so much for answering that question. Let's move on to those other charts.
Sure. Okay. So we will look at the Webby RSI. And I always like questions because I get sick of hearing myself talk. So feel free. So here's the little blue histogram down there. That is the Webby RSI, and it's measuring in ATRs, average true ranges, the distance from the low versus your 21 day. It got up there above two when we were running up. We really wanted it to get up higher than that. So hopefully, if we continue bouncing and move up, or continue to hold the 21 day and we move up next week or the following week, we want to get that distance from our low versus our 21 day up in the 2.5s or even up to three ATRs. But we'll see what happens. And let's take a look at the NASDAQ. Same thing there. That one was better. So that one got enough gusto at 2.8, would have been fine, above three, 3.5 would have been great, but that did get more momentum. So again, the the looking at the Webby RSI, the Nasdaq is stronger than SPY because of this right there. Now let's look at the Bob Marley indicator, and let's take a look at SPY on there. It's still in the green zone, and that is within 4 ATRs of your high. So that's still fine. Nothing to worry about there yet. But NASDAQ is coming down and it's almost into your yellow area. So it's just a little bit less than 4 ATRs off your high. And let's look at the RSP. That one's a bit more problematic because that's about 5 ATRs off your high. And we want to see that get a bit better. And that's what I had for you.
Okay. Well, let's talk a little bit more about if there's anything else to add to the battle plan for the week ahead. So it seems like there were a couple of days this week where there were chances maybe to need to lighten up. And even this morning, but then you got some reversals today. And so you said that you were taking advantage of those opportunities and you guys definitely were on Swing Trader.
Mhm.
pretty active today. So that was good, info for me. But I was also seeing a lot of compelling reversals out there that were making me feel good about the support that we were holding on the indexes and how leaders were acting. But let's talk about the week ahead. With everything that we went over, what should we be doing to prepare for the week ahead? Like you said, it's a 3-day weekend.
So lots of work. So what I'll tell you what I'm going to be doing. I'm going to be going through old power trends and looking at short ones because I always want to know worst case scenario that and think in my mind that we just fall next week and we do the double bottom like we had in 1998 and we come all the way down. Like that's what I want to protect myself against because I'm very bullish, but you always want to look at the other side as well and just see, okay, what would those signs be? So I'm going to look at the shortest power trends out there in time and look at the keys. And I know one key is going to be, how it acts around the 21 day. So if we close below the 21 day, I'm going to back away in a big way and wait until we get back above it to do anything aggressive. That's a big deal to me. So that's
Mhm.
the most important thing. As far as people's homework, what I would suggest they do is one, look at things short term as well as long term. So over this bear market that we had, look at the ones that held up better than the rest of the market. And the easiest way to do that is just look at stocks that never fell below their 200 day, even on an intraday basis. So their low never went underneath their 200 day. And as you're screening for stocks, make a note of those. Now, the next thing is, how did they act this week? Did you get upside reversals when the market was weak? What was strong? And look at the distance from where it opened to where it closed, or certainly its relationship to its 21 day. I wouldn't want to be trading anything that's underneath the 21 day. In this part of the market, there's always exceptions, but I can't think of one right now that would really make sense. So you want to be above your 21 day. You want the low to have held above your 200 day. That is going to kind of put you with the best
Mhm.
merchandise. Then most of earnings are behind us, so you don't have that. The Nvidia is kind of a one-off. Most of the earnings are, we don't have that type of risk. But also look at the different sectors. Don't kid yourself in you might be in different groups, but you might be in the same sector. So if you're in AI through chips, through utilities, through whatever, you just think through like what is this stock really about? Like know what you're trading and know that's where you get your diversification. Bill O'Neill would trade 4 to 8 stocks, sometimes just one stock, but that's not very diversified. But 8 stocks, you can get diversification if you're doing a retail name, a tech name, a medical name, and so on. So this is the time to do a lot of work. Like I'm going to be doing a ton of work this weekend in building my watch list. Of
Yeah.
course, I build a watch list for IBD Live members, and they have access to that, on Market Surge as well as through an email. And I take that's my personal watch list. What we've done with Swing Trader this week, we were very active. We had backed away when we should have,
Mhm.
because we were, kind of thinking what was going to happen was going to happen. It got a little worse than we thought. And the timing of it, I was thinking that it was trying to bottom yesterday, but then we were starting to get positioned that way. But then we had the tweet this morning, and that's fine. It happens. And then so we were having to adjust things around, but we're back on putting that gas pedal down. 3-day weekend, man. These are stressful because we could have a big gap up on Monday. We could have a big gap down on Monday or Tuesday. So just you got to be
Ready.
cognizant of that when you're building your watch list and
Mhm.
really have a plan, knowing that things could be moving quite a bit
Yes.
on Tuesday.
Couldn't agree more. All right, song of the week. I actually feel like I have a clever one this time,
Okay, let's do it.
but you'll probably outdo me with your cleverness. Couple reasons. So, Take It Easy by the Eagles. So, I feel like it's a great song for active traders. For position traders, I feel like the last 2 weeks I've tried to have a take it easy mindset, to not get too eager to add when things are too stretched for my style, but also to take it easy this week and not have knee jerk reactions with the pullback for my stocks, that I still have healthy cushions that are holding the levels that I want them to hold. And then for some swing traders, one of the lines in there, it says lighten up while you still can. So that was appropriate midweek this week, and maybe even for some stocks and positions this morning. And then for our market minded folks, and for you, Webby, it says just find a place to make your stand. The S&P making a stand at the 200 day. So
Well, I've got
that's
one
what I've
question
got
for
for
you.
you.
Have you been to the Corner in Winslow, Arizona?
I have not. Have you?
No, but it's on my bucket list, and I'm not even kidding.
I'm sure. I don't doubt it. I don't doubt it.
It's on my list. That is a great tune, and the Eagles are playing at the Sphere in
Ooh.
October when we do the Founders Club. So I got to figure out, you know,
Yes, you
yeah,
have to go.
I think I have to. I
You
think
have
it's just
to.
like
You have to.
But it depends if all the founders folks are doing something. I'll do
Yeah.
yeah I'll do that instead. But I will be missing the Eagles if that's the case. But my
Mhm.
song, I just thought of two, but one was going to become Monday because Monday is closed, so it's really come Tuesday. And rest in peace, Jimmy. And the other one is you can't always get what you want, right?
Mhm.
Because we wanted the market to keep going up. That's not what we really needed, right? What we needed was for a pullback and a test of the 200 day. And I
Yeah.
didn't want it this week, but we
But we
got it.
got
And
yeah.
so far, so good. And the one thing I will add to watch this week, uh, Justin did a podcast with our good friend Charles Harris on the IBD podcast, and I thought it was excellent. And and so I think everyone should go and watch that one. It was very good.
Yes, check it out. All right, Webby. Always a pleasure. We'll see you back here next week. And once again, a reminder, it is Memorial Day on Monday. So it's a market holiday. Therefore, no IBD Live or Stock Market Today video. We will miss you all, but we definitely will be remembering on Memorial Day, and hope you also have a fun day and a meaningful day with the ones you love. And then we'll see you back here next Tuesday, starting with IBD Live, investors.com/IBD Live for all the details. We will see you there bright and early in the morning. And then we'll also see you back here after the close on Tuesday. Have a great weekend, everyone.